Hi, my name is Michael Place. I'm the Energy Editor at BNamericas, and today I'll be presenting an overview of the results of our 2024 Oil and Gas Survey, which is currently available to subscribers on our platform. The results of the survey provide an intriguing glimpse into an industry that is undergoing profound change. For the most part, respondents expressed optimism about the near-term investment outlook and the solidity of their business models. More than half of those surveyed said they expected capital expenditure to increase this year compared to last, while a similar figure predicted that market conditions would spur higher capital spending over the next 12 months. Significantly, 54% said they expected oil exploration in the region to pick up in the near to medium term, up from 45% last year. Perhaps the most interesting takeaway was a belief by many that the clean energy transition might take longer than initially expected. Only 44% said they would raise spending on decarbonisation projects in the next year, down from 60% in the previous survey. The portion that predicted lower decarbonisation investment over the next year jumped to 9% from 5%. Furthermore, the share of those that predicted peak oil demand before 2030 fell to 56% from 62% last year. Meanwhile, 38% forecast peak demand in the 2030s, up from 29% last year. But even considering this reappraisal of decarbonisation scenarios, there is an ongoing sense that the oil and gas sector must adapt now to survive. The percentage of companies that believed the energy transition would impact their business models over the next year climbed to 83% in 2024 from 78% in the 2023 survey. Meanwhile, 18% predicted no impact compared to 22% last year. Opinions varied on the subject of how E&P companies could best remain relevant amid the accelerating energy transition. 40% said the best strategy would be to focus on natural gas, up from 24% last year. Another 20% plumped for carbon capture and clean hydrogen, which was the same as the previous survey, while 15% said digitalisation and operational efficiency would be key, down from 28% in 2023. The next most popular choice was investment in renewable energy, followed by LNG, liquefaction and flaring reduction. Political risk continues to pose the greatest threat to Latin America's oil and gas sector, according to the survey. Some 59% of respondents rated it their top concern, the same figure as last year. A lack of financing was the second most common choice with 11%, overtaking community risks, which dropped to third with 8%. In addition to a scarcity of economic resources, a high-level executive for a multinational company pointed out that there is a dearth of human capital as top job candidates opt for other industries. Other industry threats identified in the survey were regulatory barriers, weak demand or prices and costs, supply chain factors, inflation, and others. For the third successive year, Brazil was considered the best country for E&P investment, although the percentage of those who ranked the country top fell to 26% from 32% last year. Meanwhile, Argentina and Guyana were the big upward movers. Argentina displaced Colombia in second place with 19% of respondents ranking it first, up from 11% in 2023. And Guyana was third with 17%, up from 10% last year. The survey's participants underlined Guyana's rapidly growing production in the offshore Stabroek block and the government's mostly hands-off approach to foreign investment. Argentina, on the other hand, is perceived as a safer bet for investors under the administration of President Javier Milei, who took office last December. The country that fell furthest in the pecking order in percentage terms was Colombia. The share of respondents that ranked the country first fell by half to 6%, a reflection of the anti-fossil fuel agenda of President Gustavo Petro. That's all we have time for today. Remember that the 2024 Oil and Gas Survey Report is now available exclusively to subscribers on BNamericas platform. But for now, thanks for watching and goodbye.